Hello everybody. What's up? What's going on? Welcome back to my channels guys. So let's go through this quickly. On today's video, I'm gonna be talking about supply and demand. So I'm gonna be teaching you guys everything you need to know about supply and demand. First of all, before we move to what we have today, you should just click the like button and subscribe to the channel to get more content, right? So let's quickly dive into what we have for today. So we have supply and demand. What is supply and demand? What do we understand by supply and demand? It says that supply and demand in economics is the relationship between the quantity of a commodity that producers wish to sell at various prices and the quantity that consumers wish to buy. It's a fundamental economic principle that when supply exceeds demand for a good, price for that good falls. So supply means sellers and demand means buyers. So it means that when there is more of a product than the people that purchase that product, means that price for that product will drop, right? If there is much of that product, the price of that product is gonna drop. When demand exceeds supply, price tends to rise. So when there are more buyers, when there are more people that need that product, that need to get that product, the price will get high. So right. So let's use this as an example. Let's use this as an example. Let's say you have tomatoes, right? You sell tomatoes. So what do you do when there are much tomatoes in the market? You see that price is gonna drop because if you refuse to sell at a lower price, your customers might leave you to buy from other sellers. But if there are not much tomatoes in the market and there is scarcity of tomatoes in the market, you can sell at high price because you know that your customers might not find that your product elsewhere. That's just it. That's this concept of supply and demand. Supply means sellers, right? Supply means sellers and demand means buyers. So when there are more sellers than buyers, what happens? Price drops. And when there are more buyers than sellers, price rise. So let's go on to talk about supply and demand in Forex. Now, what is supply and demand in Forex? Supply and demand zones are observable areas on a Forex chart where price has approached many times in the past. These zones serve as point of interest and we tend to get reversal movements from these zones. We look to buy at demand zones before price moves high and sell at supply zones before price drops. So um that means we buy at demand and we sell at supply. For us to buy at demand and sell at supply, we need to buy when price is low, right? We need to buy when price is low and sell when price is high. Let's say for example, you buy BTC at $1, right? Alright. So BTC rises to $10. What do you do? Supply comes in, $10, they sell, price drops, right? That's just this that I did here. Let's take a look at this area. So let's say you bought BTC at $1 and it rises to $10. You sell, price drops. As price drops, buyers start buying it. And when the market sees that okay, there are much people buying this, what happens? Price tends to rise to make that good valuable. So when price rises, people start selling off, price drops. And when price drops, people start buying, price rises till okay. Right. So let's talk about how to spot these supply and demand zones in the market. So how to spot these supply and demand zones? There are actually two types of supply and demand zones in Forex. There is the range created zone and there is the pivot created zone. So looking at these drawings here, you can see this is the range created zone and this is the pivot created zone, right? So what do we mean by range created zones and pivot created zones? Let's talk about range created zones. These are supply and demand zones created when price gives a short-term sideways movement before impulsively moving towards the upside or the downside, right? This means that price had supply and demand in equilibrium. Supply and demand in equilibrium, causing the range, right? Before one gets much more than the other and takes over price. So if there is equilibrium, if buyers takes over, then means price is much likely to go higher. If sellers take over, means price much more likely to go lower. Right. So let's not rush things. So um and then we have pivot created zones. So what are pivot created zones? Pivot created zones, these are supply and demand zones which are created when there is a sharp short movement towards one side of price. You can see short movement, sharp short movement towards one side of price and then a follow through towards the opposite direction, right? For example, a short sharp movement towards the upside. This is it. A short sharp movement towards the upside, creating a bull candle, right? And then a follow through with a strong bear candle and vice versa. So we have the range created supply and demand zones. We have the pivot created supply and demand zones. So this is the range created demand, right? And this is the pivot created demand. We have the range created demand and we have the pivot created. Okay, sorry, excuse me. Range created supply, and pivot created supply. Okay, while the range created zones can be identified using sideways zones and ranges, the pivot created zones can be identified using candlesticks such as the inside bar, the doji, the hammer, or the shooting star. These are the four candlesticks which I use to identify my pivot created supply and demand zones. Number one is the inside bar candlestick pattern. Two, the Doji candlestick pattern. Three, the hammer candlestick pattern. Four, the shooting star. Right. So these are the candlestick patterns here. The bearish inside bar. What happens is that price moves from an uptrend, gives a sharp move to the downside, and then continue creating the pivot created demand, creating the pivot demand. Sorry, that's just it. And yeah, that's how this is created. So you must see a candlestick, a little downward candlestick, totally engulfed by the next candlestick, right? So we all know what the doji is, the hammer and the shooting star. So these are the candlesticks used to identify the pivot supply and demand, right? So how do we create an uptrend or a downtrend? So first of all, let's say we have supply and demand in equilibrium, right? You know that I said supply and demand zones. These are supply and demand zone created when price gives a short-term sideways movement before impulsively moving towards the upside or the downside, right? This means that price had supply and demand in equilibrium before one gets much more than the other and takes over price, right? So these zones are set out for potential market continuations and reversals. When price hits these zones, it continues in the general trend direction or reverses towards the opposite direction. It is recommended that you take trades based on these concepts in line with the forex market trend, right? It is recommended that you take trades based on these concepts in line with the forex market trend. You know, as they say, the trend is your friend. And to understand the trends and pure market structure, you should just what you need is to check out the previous videos I've made on trends and market structure and trade it in line with this supply and demand strategy, and it's definitely gonna work out. I'm not a financial advisor, but yeah, you should try it out for yourself. Go test it, back test it, forward test it, whatever you want to do with it. Go do it with it. But make sure you test this out before doing any other thing or before trading based off this strategy, right? So let's continue with what we have. You know, we said supply and demand should be in equilibrium, creating a range before one overpowers the other. So let's in this image, we have supply overpowering demand. So price, supply and demand were in was in equilibrium, right? Before the supply got much more higher than demand, and price broke this demand zone, right? Came back, tested, used this as a new supply zone, tested and dropped, came back, used this as a new supply zone, tested and dropped, came back, used this area as the new supply zone, tested and dropped, right? So this is how a trend is created: sideways movement, right? For demand, this is how it's created. Sideways, breakout, the resistance, retest to demand, breakout of supply. Okay, yeah, supply, retest to demand, breakout of supply, and retest to demand. So this is how a downtrend is created, and this is how an uptrend is created. Right. So um after this, let's just dive into the charts and map out these zones ourselves. Right. So let's use the 4 hour time frame. Using this 4 hour time frame, what can we identify? What do we see here? We have our, well, again, this looks like a little doji. Price didn't actually get to this. Let's check the daily time frame. Let's, aha, yeah. We have our inside bar candlestick here. This is the inside bar. When you map out this zone, this is our supply zone, right? We have this inside bar candlestick here. What happens? Price moved up, gave a pivot demand, continued to direction, and then came back to test that demand, continued going higher, right? Then what else do we have? We have this range created demand zone. You can see range created demand zone. What happens? What happens after this movement? You can see price left this range created demand zone, came back, and then moved to the upside, right? So let's take a look at this inside bar candlestick here. This inside bar, what happened? Price came back, tested, and dropped. Inside bar, price came back, tested, and reacted. So uh, every supply and demand zone might not totally hold, but they will surely react. So you can have a supply zone, right? And price moves straight into that zone. Price might actually do this, come back a little, and then blow off that zone, right? So you might not have that zone hold, just like sorry, you must not have that whole zone totally hold, but price must surely react. Price must surely react. Let's take a look at this doji. You see, we had a little bit of reaction here. We had a little bit of reaction here, right? And look at this hammer candlestick pattern. What do we have? A huge reaction into the demand zone and the reaction. What do we have here? Shooting star, price reacted, but then blew off, just like I taught you guys. It's like I just said, price might react and blow off that zone, right? But this doesn't always work. There are other things you need to combine this with, such as market structure and other concepts you need to combine this strategy with for it to totally work. So let's take a look at this whole pivot demand, upward move, downward move, right? This is a pivot demand. This some kind of range created supply because these are sideways candlesticks. They are not precise candlesticks, they are sideways candlesticks. So I'll classify this as a range created supply. What do we have here? Range created supply. What happened? Price moved a little bit above, but then still held, dropped. So what do we have here? Range created demand. We also had this pivot demand, right? So this range created demand held for this movement, and this pivot created demand held for this movement. Um, excuse me, right? So well, let's take a look at Euro USD. On this, let's take a look at Euro USD. Come on, go, babe. You know what's take. Come on, go, brah, brah. You know what's take. Come on, go, brah, brah. You know what's take. Come on, go, brah, brah. So let's take a look at this area. Where should we start? Should we start with the weekly time frame? Right. So what do we have here? We have this cute inside bar. This inside bar is very, 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 very obvious and cute. Right. So let's take our zone, map it out, and yeah, reaction. This is a pivot created demand supply, sorry, and this is a range created supply. You can see that we had a sharp movement, and then drop, right? But this side, we had a sideways movement before we dropped, right? But one thing is this: we can still find our pivot supply and demand inside the range created demand and supply. So just like this, you can see this sharp upward movement before the strong move downwards. This is our pivot. This is our pivot supply, right? We have this range created supply. We have this range created demand. I don't know. I'm just mixing words today. We have this range created demand, and then we have this pivot. Can you see this Doji candlestick here, right? So range created, pivot created. So you can see price reacted as it dropped into the zone, but it didn't actually hold. But price held here, it's held here. right? So let's take a look at more zones. We have this. This is a sideways movement. Range created demand, which can be refined into this pivot created demand, right? So in every range demand and supply zones, we can still find pivot supply and demand zones. Let's say we have this. We can still have this, right? So this is range, but we can still have this pivot here, right? So inside this whole range, so we have this range, we have this range, but we have this pivot. What happened? Price held at this pivot, right? Let's go down to the daily time frame. We had this whole range. We had this whole range, right? But what happened? Price used this pivot to react. We've got this whole range here. Alright, price didn't actually get there. Price didn't actually get there. We had this pivot, right? Price dropped, moved, gave a sharp movement, came back and tested and dropped. Same thing here. Inside bar, sharp movements, tested, dropped, right? So what else do we have here? This is a range on the lower time frame. So we have this range, price tapped into the range and dropped. Um, what else do we have? What else do we? Okay, we have this candlestick, this Doji candlestick. What can you see? Price moved out of the Doji, came back, tapped, and dropped. This didn't actually hold here, but price reacted. Huh? Let's use this Doji. Price reacted, didn't actually hold, still dropped. Right? We have this range. What happened? Price held, dropped. What else do we have? Still had this sharp upward move. Price reacted, dropped. We have this range, but we can still refine this to the inside bar. What happened? Price tapped, dropped, right? So we have this range also, can still be refined to the inside bar. Well, basically the same thing. So it's something I explained. Price respects supplies on the downtrend, right? And respect demand in an uptrend. So demand is being respected here, supplies are being respected here, right? So right guys, we've come to the end of this video. I hope you guys learned something new about this video. I hope you guys learned something new on this video. So if you have questions, you can drop them in the comment box. Don't forget to like and subscribe. So we've come to the end of this video. Have a good day, guys. Peace out.